Good morning, good afternoon, good evening, wherever you are located on planet Earth. Welcome to another edition of the PulseWave Report with yours truly, Dex, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that are on sale right now. You guys, you're not going to believe it, but yes, it is true. The Pro package is on sale for amazing amounts of securities from stocks to futures to forex to crypto, you name it. Pro package on sale right now for $99. Just go to pulsewavetrading.com, type in the coupon, and you can be blessed this morning with the pro package. And in addition to that, we have our upcoming Friday, this Friday, and the following Monday is going to be our final webinars for the year. You don't want to miss it, especially once you buy that pro package for $99. You're going to want to attend at least one of those webinars because it's going to tell you how it's all about to go down and all of that good stuff. So get yourself ready. You can give a gift to a friend this Christmas, put this gift in someone's stocking, bless somebody so that they can be financially independent going into the next year, because 2021 is going to be a beast. With that being said, ladies and gentlemen, let's jump into what's going down. So today is FOMC day. This will be the final Fed moment for the year. Going to get an idea of how the Fed is thinking going forward. Nothing's expected. We don't expect for them to touch those interest rates one way or another. Doesn't mean they can't surprise, though. I just think the chance of them surprising is really small, but they have surprised before in the past, so you can never totally rule that out. So that's today, I think at 2 o'clock, something like that. So, and that's Eastern Standard New York time. And as we speak right now, the markets are a little bit muted. The Dow is only up 12 points. S&P futures up 19 and a half. I'm sorry, NASDAQ up 19 and 3/4 points. S&P is up 4 1/4 points. Russell up 4.7 points. The mighty Bitcoin Futures Composite Index broke the 20,000 barrier. It is now up $960, trading at $20,520. Nat gas down 3 cents at $2.64. And crude oil is off 20 cents at $47.42 a barrel. The long bond is down 20-30 seconds at 172 and 8/30 seconds. Gold futures up $4.30 at $1,859.60 per ounce. Silver is on fire, up 54 cents at $25.19 an ounce. And the US dollar is off 20 pips at 90.26. We hit 90.12 in the overnight low. So I don't know. This is threatening to break down. You can't afford to break below 90 and expect to maintain a strong dollar policy coming out of the White House. So the dollar is shrinking. That is problematic. I don't care where you stand. That is problematic. That is not a strong dollar policy. Anything below 90 on the US dollar index is a weak dollar policy. That is a devastating situation. You don't want to be there. You don't want that dollar to be there. But hey, what do I know, right? I'm just a dude on YouTube. What do I know? Other than that, ladies and gentlemen, it's going to probably be a muted session and up until the reports come out. So you can pretty much take that to the bank. I don't think too much is going to go down between now and then. Let me just double check something, though, as far as the calendar is concerned. All right, so, yep, 2 p.m. Federal Reserve announcement. But then after that, we got Federal Reserve Chair Jerome Powell having a press conference at 2:30. So depending on what happens at 2 o'clock, there may be no reaction at all. But once 2:30 rolls around, he starts opening his mouth. that could really push markets around based on what he is going to say or not say. We also have the NAHB Home Builders Index at 10 o'clock, business inventory is 10 o'clock. And we got market manufacturing PMI and market services PMI at 9:45 a.m. And let's see, retail sales already came out, and that was at 8:30. So that's about it today. So it's a packed day. You got quite a few reports coming out today. Other than that, it probably will be pretty quiet. All right, let's see here what else we got. I'm not really expecting too much today. Let's see here. As you know, Bitcoin, this is a new record high for Bitcoin. You know, I've covered yesterday. We talked more about the 100-year cycle and how that looks. Well, one of the things that I think that are going to be adding to the 100-year cycle is what happens with these government reports. Now, the U.S. retail sales did disappoint. It tumbled the most since April. After revisions, of course, this is the second straight month of retail sales declines as clothing and electronic sales have slumped. Okay, so that is questionable because I thought that, you know, electronics will be flying off the shelf per se, because this year has been one of the biggest video game release years on record, man. A lot of AAA titles, and not to mention the advent of the next generation consoles, which sold out in minutes. All right, so that is on the Xbox side for Microsoft and on the Sony side for the PlayStation 5. So I would have anticipated that the retail sales would have been a little bit better than that, but I keep forgetting. I always forget this. This is backward looking, so it did not take into account that. So maybe the first quarter of next year, the retail sales will reflect a little bit better because of that. I don't know. But as it is right now, it's whack, and it's very difficult to it's crazy. All right, let's see here what else we got. Okay, so another thing is that the rationality behind the market rally, again, it's optimism. All right, so markets are rallying, hitting new highs because they are really optimistic that a stimulus package is on the way via the Fed. They claim that the odds are that this deal is more than $500 billion the Republicans proposed, and likely less than the $900 billion of the joint Republican-Democrat committee proposal, and that it is rightfully welcomed by the markets, but the size of the fiscal package is the issue. Ain't none coming right now, folks. We talked about this. Okay. So I don't know, man. It's like they're saying that the global economy cannot continue without the central banks being involved propping the market up. I don't understand. Either the markets are on fire because, once again, the retail specs are in there duking it out and the banks are participating, or not. See, that's the little dirty little secret they keep from you guys. They don't want to tell you that in order for a rally to really be a sustainable rally, there are two ingredients that you need to have. And that first piece of information, that first ingredient, is you're going to need retail speculation involved. Okay. So you can't ignore that. That's what I'm saying. You just can't ignore that. That's a very, very, very important part of it. Got to have the retail specs. There's no way around it. You can't dodge it. You can't jump over it. It is a fact. Okay. The second ingredient that you need is you need the banks to be involved. All right. So the financial sector has to be involved. If the financial sector is not involved, then you don't have yourself a sustainable rally. All right. These market facts and forces have been around forever. And they want to pretend all of a sudden that it doesn't matter. Oh, it doesn't matter. You don't need that anymore. Since when? Since when that you don't need that? So they want you to think that it's a brand new day and that all the rules of finance and economics have been suspended and they no longer apply. And that could not be further from the truth. It does matter, ladies and gentlemen. All right? Everything matters. Everything matters. All right? Don't believe the hype. Well, they'll tell you, oh, nothing matters. It doesn't matter. It does matter. It matters a lot. All right? You can't suspend truth. You can attempt to suspend truth, but at the end of the day, you really cannot suspend truth. The truth is going to be the truth, no matter how you slice it, no matter if you like it or not. The truth is going to remain the truth. And those are the truth. You can't have a sustainable rally without the financial sector, the banking sector involved. All right. If the banks are struggling, then it's only a matter of time before that starts to weigh on the market. These are things that they don't like to talk about. They don't want to talk about that. They like to talk about sector rotations and things of that nature, all that fly stuff, to give you some kind of hope because, they don't want to discourage you on the national TV. National TV, when it comes to the business channels, they're designed to do one thing and one thing only, and that is cheerlead the market. All right? That's their job. Their job is to cheerlead the market. You're never going to hear them talk down about the market or say anything negative about the market. The only negative that you really will hear sort of is them dissing the specs. They always want to diss the retail investor. They always want to diss the retail specs. And the reason that they do that is because you make them look bad at times. All right? Because you're making more money than they are. You hitting these markets better than they are because you got the PulseWave. So you're making them look bad. You're dipping your toe in their kiddie pool and they don't like it. So there, when the market is going down, they blame the retail spec. Speculators, right? They say, oh, the specs are doing it. It's the specs' fault. Remember Obama? Speculators, those darn pesky speculators. The speculators are tearing the market apart. They keep shorting. They won't stop shorting. They won't stop selling. Right? But when the market is up and the market is doing well, they say, well, the reason why the market's doing well and the reason why the market is doing what it got to do right now is because of my incredible foreign policy, my incredible economic policies, because of the incredible wisdom and vision of the Federal Reserve. That is why we're doing so well. That is why things are going the way they're going. So they want you to pay homage to that. They want you to recognize that. All right? That's what they do. When the market's up, it's because of them. When the market's down, it's because of you. And it's a never-ending cycle. That's just how they roll, and it's never going to stop. It's always been that way, you guys. They even wanted to blame the specs during 9/11. They blamed them. They said, look at this. It's so unpatriotic. They are so unpatriotic. Either you're with Al-Qaeda or you're with us. So they said it was messed up that you were shorting the market during 9/11. And then again, during Obama's reign in the White House, they said, it's these darn specs, these speculators driving up the prices of things. So when it came to crude oil rallying, they didn't want to take responsibility for the crude oil market hitting $150 a barrel. Oh no. It's those darn speculators, those pesky speculators. It's their fault. This is their doing. This is their fault. And then when the price suddenly collapsed, they took they took credit for it. They said, "See, we were able to get in there and get those pesky speculators out the way. So now things are going the way we want them to go." They always want to take credit when the market is so-called putting money in people's pockets. But when the market is taking those things away, then they want to say, "See, it's those darn pesky speculators." You can't have it both ways. And see, that's how you know, too, that the individuals who tout that nonsense, that they don't know anything about the markets or the economy. They're financially illiterate. They don't understand the way things move and the way things work. And they show it. They demonstrate it with the ridiculous things that come out of their mouth. But you're not supposed to notice, though, that they're ignorant and that they don't know the things that they claim to know. So best believe, ladies and gentlemen, that when the run for the exit does come, they already got the script written out. It's those darn speculators and short sellers. They keep shorting. You know what? We're gonna change the rule. We're gonna make it so that it's impossible for you to short the market. We don't want them shorting the market. And they don't care if you short the market, ladies and gentlemen. It's never been about that. What they care about is that you are making money in their market. How dare you, little people, dip your toe in the deep end of their pool? That's what they don't like. That's what they don't want to tell you. But I'm gonna tell it to you. I'm gonna tell it. I'm gonna tell it like it is. I'm gonna give you the facts. That's what we do here. We talk facts. So yeah, ladies and gentlemen, it's coming. It's coming. It is coming. So just remember where you heard it. You heard it here first. I'm telling you what's up. I'm the one that told you what time it is. All right. Now, with that being said, as we push forward, you got to really look at what's really going on. You can't just give a cursory glance to it, So, what do I mean by that? You got to peep game. You don't just take a lot of things at face value. You got to peep game because everything is game. Everything. Everything. When they start cheerleading the market the hardest, that's when the market is standing the risk of a decline. So can you really trust the talking heads on TV and their booming economic outlook for these markets? You can't. So here's a good little quote for you from The Sopranos, season 1, episode 5, called College. Meadow Soprano speaking to her father, Tony Soprano. "Are you in the mafia?" Tony: "That's total crap. Who told you that?" Meadow: "I lived in this house all my life. I've seen police come with warrants. I've seen you going out at 3 in the morning. Tony: "So you've never seen Doc Cusimano going out at 3 in the morning on a call?" Meadow: "Did the Cusimano kids ever find $50,000 in Krugerrands and a .45 automatic when they were hunting for Easter eggs?" Tony: "There is no mafia." Appearances can be deceiving, folks. Most major stock indexes are up double-digit percentages year to date, implying significant economic growth and a booming outlook for businesses, workers, and households. But remember, just because you see Mr. and Mrs. Rose showing up together at family functions and showing up to little Johnny's soccer games and little April's ballet, ballet recitals or what have you, it doesn't mean it's a happy home. See, what you don't know is that Mr. and Mrs. Rose got divorced eons ago. and they're just putting on a good, happy face in public to make it seem like the family's together and happy. But no, Mr. Market and Mr. Economy have been divorced for a long time. Mr. Market and Mrs. Economy are playing game. They're gaming you. They're playing you. They're not happy. They're not together. They divorced. They sleep in different rooms in the house. She's in one wing of the house. He's in the other wing of the house. All right. You just didn't know that. Appearances can be deceiving. Most major stock indexes are up double-digit percentages this year to date, implying significant economic growth and a booming outlook for business, workers, and households. But economic activity is well off the lows seen in April and May. The same data also suggests we are nowhere near the same level of activity seen pre-COVID. To quote New York Fed President John Williams, we are still in a profound recession. That's a quote from December the 2nd of 2020. Is the economic rebound real and durable, or a false positive supported by record levels of artificial stimulus? Does current investor confidence hinge on more trillion-dollar stimulus agreements? Oh, heck yeah. Although we have our suspicions, we won't know the answers for quite some time if you're leaning heavily on the government reports. Maybe the mafia doesn't exist, and perhaps Wall Street's exuberance is correctly foreshadowing an economic boom. But when you examine the economy versus the market, you have a quite different story. Oh, yeah. Oh, yeah. In Bloomberg's opinion section, Nir Kassir analyzes the historical relationship between the economy and equity market returns. Using GDP and corporate sales, Kassir finds a historically weak correlation to S&P 500 returns. His conclusion is simple: the stock market doesn't care about the economy. Based on his analysis and what we see going on, it's hard to disagree. Regardless, if we are to invest in stocks, we must understand what we are buying. A shareholder of a publicly traded company is an owner of the company. The share price represents the present value of a future stream of earnings. It is no different from buying a restaurant, dry cleaner, or a financial advisor. Shareholders, excuse me, shareholders assess many factors that drive future earnings. Of them, broad economic activity ranks at or near the top for most companies. The following graphs provided show 10-year rates of corporate profits and GDP. Now, the correlation is not statistically strong, okay? When you look at it visually, and I've told you here on this channel that not all things can be, gleaned just from looking at a chart. The fact of the matter is there must be a relationship between time and price, and when you add in your non-factors. So when you take a look at corporate revenue, it's almost entirely dependent on consumer and government spending. That's right, corporate revenue being almost entirely dependent on consumer and government spending. Now, in 2019, those two factors accounted for 87% of GDP. Since the 1980s, the percentage of S&P 500 companies with sales growth over 15% has been declining in line with economic growth. Regardless of what anyone tells you, the underlying long-term basis for investing in stocks is future earnings and ultimately the economy. All right, so how much economic growth should you expect? Well, in the decade-long path of recovery, following the last three recessions, each economic expansion has been subsequently weaker. All right, to predict a post-COVID growth trajectory, you would need to look only at the ratio of federal debt to GDP. The trend lines on that graph would show the ratio trend of economic growth that are negatively correlated. Now, since 1990, the relationship has a very high R-square of 0.928. As the ratio of federal debt to GDP rises, economic growth declines. That's a bad word on Wall Street. They don't like the word decline. All right. I'm here to tell you that it is looking really, 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 really bad. And they know this. That's why they've been making provisions for it. All right, because that's what they do. That's how they roll. They gotta already have the scripts rolled out. They know what they expect and they know what's coming. So if they expect a market crash, let's say, they'll tell you everything is good with the market. We project this, and if you put your money in these particular stocks, you'll be okay. What they're really saying is, no, we have no confidence in the market at this point, and all the big boys are already starting to liquidate in small amounts as not to disturb the bull market. See, that's how they really get down. That's what you need to be aware of. Okay, this is why they're trying to get the retail spec out the way. All right, they're trying to get you out the way. When they start doing the attack pieces, you know they're scared to death. Are you ready? Did you know that securities regulators are already starting to accuse Robinhood of deliberately misleading customers? What would contemporary markets look like without Robinhood? You always need the retail spec. I don't care what anyone tells you. You need the speculator, man. Even though it's a fair question, considering that the app's explosion of active users, marshaled by loose cannon traders like Barstool Sports founder Dave Portnoy, preaching the mantra of stocks only go up, has created a wave of retail order flow to line brokers' pockets. That's not to say that the relationship hasn't benefited users, many of whom have parlayed their savings into big winnings thanks to popular stocks like Tesla, Shopify, and others. But frequent glitches during sell-offs, as well as uncertainties surrounding the company's disclosures regarding how it makes its money, the average Robinhood user would probably be dumbfounded by the phrase payment for order flow, have drawn the attention of federal investigators with the SEC. But the SEC isn't the only agency interested in Robinhood, because according to a Wall Street Journal report, Massachusetts state regulators and from the Massachusetts Securities Division are planning to file a complaint against Robinhood, alleging the company engaged in predatory marketing to recruit vulnerable, young, inexperienced traders, then effectively sold their order flow to big institutions, allowing them to profit. Stop right there. Stop right there. How is it that the NASDAQ, the New York Stock Exchange, to name a few, do the same thing? They do the same thing. They allow front running. You can pay for front running. It's not a secret. You can pay to get government reports issued to you before it goes public. Did you know that? Yeah, if you got the money, you can pay to get government reports given to you minutes before they come out so that you can position yourself in the market. Yeah, that's old news. That's old news. And not only that, but you're allowed to operate in dark pools. What is a dark pool? It gives the large institutions the ability to cloak themselves so they can operate in the background without it showing up on the NASDAQ level 2 quotes. See, Wall Street has been shady like this for a long time. So don't get it twisted. Don't try to pretend like, you know, Robin Hood is some evil, Count Dracula. When the big boys, the Wall Street has been doing this for ages. All right. So they need to stop with that. They need to stop that. Plus, forex dealers have been doing that for ages too. They have reports where they'll show you what the majority of the traders are doing on their platform. And yeah, I mean that's old hat. What are you talking about? All right. So selling what the customers are doing, that doesn't really help you do anything. All right, that doesn't technically move the market, except for you're selling it to the big boys and then they're moving the market. That's it. All right, so don't give me that. Plus, we're not even going to talk about the high frequency traders who are able to enter millions of trades within seconds. All right, and that's okay because they're Wall Street's getting broke the heck off because of these traders. So don't talk to me about what's fair and what's unfair when it comes to the art of and science of trading. All right, you need to chill with that. But the SEC isn't the only agency interested in Robinhood because, according to Wall Street Journal report, the Massachusetts state regulators are coming in now too. To be sure, there has been at least one Robinhood horror story that we've seen involving an amateur trader who committed suicide after losing everything. To be sure, Robinhood, as prior noted, has helped hundreds of thousands of Americans drum up badly needed funds during an extremely difficult time, economically speaking. We imagine this could create some problems for the state's case, something that's further highlighted by the last round of record highs for the NASDAQ and Russell. Still, Massachusetts Securities Division is arguing, according to a 20-page draft seen by the Wall Street Journal, that Robinhood failed to protect its customers and their assets, violating state laws and regulations, exposed Massachusetts investors to unnecessary trading risks by falling short of the fiduciary standard adopted this year that requires broker-dealers to act in their clients' best interest, the state said. All right, you guys, see, this is another issue. See, this is where the U.S. citizens need to start pushing back, because you think this sounds good, right? It's not the government's job to protect you when it comes to investments. The government they have no business. And see, that's why the United States, it's another reason why, it's collapsing from within. It's because of all the corruption. For instance, why does the government get a cut of your proceeds of your investments? Capital gains tax should not even exist. They have nothing to do. They're not out there hustling with you when you're building your business with your own blood, sweat, and tears. So why do they get a cut of your profits when you make money, when you out there hustling? Of course, that's a whole nother live stream. All right. Corporate tax, yeah, that's in the Constitution. But personal income tax is nowhere in the Constitution. There's no law for that. The only law is the barrel of the gun. If you don't do it, they'll show up to your house with M16s and Uzis ready to blow you away and lock you up. See what I'm saying? See what the American people have allowed to go on for ages? They always say, no, we won't allow this or that. People will rise up. You ain't rose up yet. Perhaps the most interesting aspect of the complaint is that it centers around the accusation that Robinhood gamified markets with the app, reducing trading to little more than an app-based gambling, or at least so the Wall Street Journal explains. The accusations from Massachusetts center on the tactics that the company uses to keep customers engaged, claiming it encourages customers to use the platform consistently throughout what it calls gamification. The complaint alleges that through the promise of free stocks, push notifications, and its signature digital confetti, Robinhood encourages continuous and repeated engagement with its application. State regulators allege Robinhood allowed one customer with no investment experience to make more than 12,000 trades in just over 6 months. It is an interesting angle to take, particularly as states like New Jersey have moved to expand the legalization of gambling, while DraftKings and FanDuel are openly help millions bet on sports games. So you can see here the contradictory situation. All right, this is the conflict. Gambling is legal in the United States. Why do you have a problem that they're making money in the market? That's what it really boils down to. They're making money in the market. Other brokerage platforms advertise on television daily, encouraging you to use their platform. So why can't Robinhood encourage people to use their platform? You don't think that these brokers are encouraging people to trade more with the whole free trade thing? They are. Why do you think they're advertising, hey, free trades now, no more commissions, free trades? So that is not encouraging you to trade more and use their app. And again, why is the government in your business? Consenting adults should be left alone to do what consenting adults want to do. Get out of people's personal lives. And people, you can't go crying to this is why government gets corrupt and out of control and too big. Because when things don't go your way or go left, you want to go crying to the government. I didn't know what I was doing, then why did you do it? See what I'm saying? Because people are greedy and they're looking to make a quick buck at any cost, any way they can. Turning to gambling or the market has always been there. What are you doing? See, you guys are gonna mess around, and I tried to tell you guys that this was coming. In the not so distant future, they're gonna make it impossible for anyone who has not traded before or has a open brokerage account to open one. They were gonna put in all types of regulatory hurdles to make it almost impossible for the average person to open a brokerage account and start trading. You don't want them to do this, folks. Don't let them take away the last bastion of hope that you have. The last vestiges of your freedom is the markets. The ability to open an account and make trades, whether you're trading Bitcoin or you're trading altcoin or you're trading forex or you're trading stocks or you're trading futures. You don't want nor need them in your business. Keep the government out of your finances. See, when you go crying to mommy, this is what happens. This is what happens. All right? This is what happens. All right, just something for y'all to think about. I'm not keeping y'all long today. All right? Not keeping you long. I'm out of here. Just remember what I told you. We got the last webinars of the years coming up, okay? And that's going to be this Friday and then the following Monday. All right? So please don't miss it. Don't miss it, ladies and gentlemen. You don't want to miss it. PulseWaveTrading.com, $99 for the pro package that includes all the securities that we offer as far as the PulseWave reports. The reports cover a wide range of securities. All right. With that being said, you guys, you know what it is. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Smash that like button. Peace.